Hello again. Slightly longer video than normal. Apologies for that if it's not your cup of tea, but there's a reason for it. It was a tricky morning this morning, so it will take longer to describe what I did. Right, okay. As you can see, we've got a long uptrend here, but we trade short-term charts, even to the point of looking for a 30-minute candle, as you know, and trading that trend, that within that candle, the 5-minute trend. Now, but what we can't do is discount longer term trends, and what we've got going on here, or what we did have at this time of the morning, remember all I could see was that candle there at 6 o'clock in the morning and the start of the new candle. So that was telling me we were in a 15-minute downtrend, well, 30-minute downtrend here. High, low, lower, high, lower, low. Old support acting as resistance, and potentially I was looking for some sort of short. Now, I didn't really want to be short because we're going, if one of the best things you can do to work out the long-term direction of price is just stick a line on there on whatever time frame you're trading, like involved in. This is H1, this is M30 of course, and then a line connecting the tops of some of the other points, and if one's longer than the other, you know that's the longer trend. So clearly this is the more powerful trend. This is where we should be considering getting back in to the long side, and this is not. However, it's nothing's over till the fat lady sings. In other words, this could just easily turn around. This could have been the start of a massive reversal on this up move. So what next? Right, well, we start to analyse what's going on. We know we've got an alert to the long side. We haven't got a new one to the downside yet, so longs are still on. The M15 is telling us categorically that you've got an alert to the downside, and you can't even consider trading, even if this was a better looking setup than it is at the moment, long until you get an alert to the long side. So we did get an alert there on that close of that candle. So 7:30, remember there's 2 hours difference in the chart time to the real time in the UK. Then I want to know what else is going on this chart, and I haven't really covered this much in any of the previous videos, so this is what I do. I start to draw the significant levels, and what I mean by that is the high of that H1. We know an H1 is the swing, it is the high of the swings on the lower time frames, so that will be significant, just as we could treat this with the significance and this swing low as significance. If we were here, we have to treat the candlesticks in the same fashion. So there's the high of that one there. Now I know we're going to get problems. Remember, we're down here with price. We're going to get problems once we start to approach these levels. This is also a problem above us for longs. We need to be through that as well, and by through I mean we need to some sort of close or something, and then we can start to get a better idea of what's going on. To the downside, if we were, I hadn't thought to mention that until now, it just occurred to me. To the downside, if we'd wanted to go short, we would categorically have to get through this this low of this candle here, and then ultimately here and here, that are going to cause problems on the price as well. The reason we know this is because it's caused a problem for price. Something has caused that to push down, and that's why you've got a wick there, and then push back up. So this is stuff that I've sort of in my subconscious all the time, but can forget to mention on the charts with you. So not only that, I did notice whilst sat there waiting, we've got 2B reversal, Vic Sperandio's 2B reversal. Look it up if this is the first video you've watched of mine. Swing 1, swing 2, swing 3. Place the low on the low of swing 3. Swing 1 rather, and the candle that breaks through it, 2B reversal pattern, as clear as the nose on my face. Candle that breaks through it is the significant candle, so I think he calls it the poke bar. And put a high on there, and the minute the price is broken through, he would say hit the trade and aim for there as your target. And I prefer to wait for a close and an alert and the lower time frames and so on and so forth. But it's all adds fuel to the fire. 2B reversals, they work. 2B reversal in an uptrend, even better possibly. This deep pullback here, in my opinion, through the top of his level there, is purely because of the time of day. They've been loading up, Frankfurt been talking to Hong Kong, and Hong Kong been talking to London, and planning their trades. I'm talking about different offices in the same companies. I'm sure they trade against each other. I'm sure it's illegal, but who cares? Coulda, woulda, shoulda. I don't really know. But that's probably what's been happening there. Just loading up, knowing they were going to push it further high. They're all sat in the board meetings, and that's why it came back deeper. Not much use to you as a technical analyst, but worthwhile having in the back of your mind when you're wondering what the hell the chart is showing you. So down to 15 again. Well, we know we had the 15 up. We'll stick the vertical now on the new candle. Sorry, there's all these lines. And there we have the point we're ready to enter the trade, or I was, on the start of the new candle. Now, what should I have waited for here? A pullback. The reason I didn't wait for it is because we've had all of this sort of toing and froing. We've had all of the gathering of orders to the long side, in my opinion. The momentum of the day, 8 o'clock in the morning, that's when everyone sat there ready with their fingers on the button. So I felt it was better just to use M1. And the minute I got an M1 reversal to the long side, well, not exactly the minute, but we could see the H1 candle, the H1 high had been breached and closed through. And that trigger was enough to get me excited about this. So I'm not sure why the delay. I think I might have been waiting for a break of this little red high here, and hit the trade. It doesn't look much, looks stupid on a chart like this, but it's my 7 or 8 pips, 7 minimum after spread, and another day, another dollar. You can see how the price touched that H1 and tested it multiple times. That would have been annoying if you'd been going for yesterday's high. I expect to poke through these levels, these 50 levels, 13150, and so I was happy to go for my 7 or 8. It might have caused a pullback here before closing my trade, and then I might have considered even adding a bit, to get to this level, but coulda, woulda, shoulda, and I didn't do it. That's all there is to it. But you've got your price messing around at these significant levels, and then it's played around again, and it's come back down and hit that H1 high, tested as support, and then we've finally broken through the daily high again and messed around again, and it's messed around on this 50 level again multiple times here, back up, hit the 75 level, and as you can see, it's gone on another 75 pips from here, from the daily high, really. So 80 pips from the daily high. So pretty amazing moves. 219 for the day, but hopefully that explanation of that trade this morning has given you some food for thought. Thank you for watching, and catch you another day.